Hello everyone, this is episode 31, the actual topic section. So we are going to be talking about blitzscaling and blitz fixing. So everybody can also check out the news, which had a little bit to do with this topic, and had a few good, had a few good news stories in there. But now we're gonna go on to talk about why companies are doing this very lucrative strategy, and is it always worth it, and what effects does it have?
I even called it in my part rapid growth and the aftermath.
Yeah,
Definition time?
please.
Definition time. So understanding blitz scaling. So blitz scaling is basically a strategy that is prioritizing speed over efficiency and building a company growth that is like a breakneck pace, which means super fast. And what it basically means that it understands that it's very inefficient, that it also is high risk. So there was one guy who literally wrote a book on it. His name is Reid Hoffman. So he said, you are optimizing for growing your business and your customers at a fast rate, which means you'll spend capital inefficiently, and you will do it by taking risks and at certain times. So basically the core idea is that first to scale, that means like you have to like winner takes all, or you have to like catch the market, or like in practice blitz scaling often looks like growth at all costs.
Yeah.
That means you don't really care what's going to happen afterwards. It's about like, hey, what can I do now to make it grow? So burn through huge amount of cash, backed by investors, willing to fund an expansion in hopes of outsized returns.
I have to correct you on one thing. The guy's name is Reid Hoffman.
That's what I said, no? Reid Hoffman.
I think you said Reid.
Alright, sorry.
Anyway.
Reid Hoffman.
Reid Hoffman, and who was in a lot of companies that are exemplars of blitzscaling. So it's like PayPal, LinkedIn, Facebook, Google, Amazon. Yeah.
Yeah, so he's also like a godfather of it, because everyone uses his book. And the opposite side of what we said is blitz fixing. So basically blitz fixing is when the company breaks things in the process, right? Because it runs so fast, it basically disregards a lot of stuff. So it eventually faces a moment of reckoning, how they called it, and a phase that we call the blitz fixing. So essentially urgent cleanup and course correcting the hyper growth, and usually it takes like in startups, and even when it comes to blitz scaling, they say grow fast or die, which literally is like, hey, you grow fast and you almost die. So before almost, you have to fix it. And if you don't fix it, literally blitz scaling means that companies know that they'll fail if they don't succeed.
As the famous philosopher 50 Cent once said, get rich or die trying. That's blitzscaling in a nutshell.
Well, that's so true though.
It really is. It's the Silicon Valley version.
Yeah. Oh my god. So yeah, that's pretty much what it is. I basically structured it more of like, hey, here are the highlights and very simple examples from companies that were blitz scaling successfully, and the ones who were blitz fixing, and basically how to not, like, it's more of a strategic approach that I took on this.
It is, yeah. And the other thing about blitz scaling is that everyone's trying to implement it everywhere right now, and we're going to have to talk about why that's a disaster.
Fair.
Yeah. So we have good examples, we have bad examples, and hopefully we can give some insight into what it is.
Absolutely. Yeah. So for me, when it comes to blitz scaling, basically I have these like openings that I kind of helped with the Gemini to write this because I couldn't really come up with anything fun. So imagine driving a race car with no brakes, no seatbelt, and a tank full of rocket fuel. That's blitz scaling in business terms.
I guess, maybe. That sounds horrifying, but it's not a very forgiving metaphor.
Yes.
Blitzscaling in essence is that you are waiting to outdo the market. And there was an anecdote in a book about how Peter Thiel and Elon Musk and all these guys do their own thing, and Mark Andreessen. And they were talking about their gambling strategy and how they used to play poker. They weren't good at poker. But what they could do was outbid the other person constantly until they get a winning hand.
Yeah.
So it's all like I'm gonna bluff a whole bunch of money. If I lose it, no problem. I've got a whole bunch more money over here.
Yeah.
And keep like either bluffing or waiting for a good hand to come in. And that's so much so descriptive of what blitzscaling sometimes is.
Yeah, because you have so much money, so much capital you're burning through, something's gonna succeed, and when that thing succeeds, you're gonna win it back.
Exactly. So this is a key moment in my head. I was like, oh my god, this is their entire business strategy from day one. Just invest in everything and throw money around, and they just like hope something sticks.
Yeah, but when it comes to business, you have a little bit of like skill involved as well, right? You said like they sucked at poker, but here you can hire the right people anyway. You just gotta disregard some procedures. So what I did, like when it comes to examples and like what it is, so that's imagine driving a race car. That's metaphor is basically speed over efficiency, right? So you grow fast, you grab the market before anyone else can.
Yeah.
Obviously, it was born in Silicon Valley, where a bunch of tech bros are like, yes, go big or go home.
These are also like another thing I noticed is because this term is particularly exists in Silicon Valley because oftentimes with Silicon Valley you don't have a physical product that's reliant on like resources directly.
And that's where what I found a lot of blitz fixing, how the companies failed, was specifically the ones that were not online.
Yeah, exactly. And another thing about that is like back in the day, you could still call what the robber barons back in the day did blitz scaling or something. And the robber barons were people who owned a lot of industries back in the day. It was more like oil tycoons and so on. But the resource they were selling would run out because it's not service industry often. It's often manufacturing or resource gathering or something like that.
Yeah.
So fundamentally this is much more a Silicon Valley thing because of the service industry aspect of it.
So what is like I wrote as a takeaway. So blitzscaling is a calculated gamble, what you mentioned in terms of poker. So if you win, you own the market. If you lose, you're the fastest one to crash.
Yeah.
So you basically can run out of money. So I have a few examples when it comes to success stories of blitz scaling. So Amazon, obviously. So when Amazon launched in 1994, he's like, he raised billions, and we spoke about this before. And he's like, I want to get big fast. That was like a little bit of an innovative idea back in the days. But he was burning through cash through the years, and he was focused entirely on market share and growing and selling everything. But in 2000s, weeks before running out of money, Bezos raised $672 million in bonds just before the dot-com collapse.
Oh, yeah.
So basically, he's like, I have no money. I burned through all the capital. He raised more, and because if he wouldn't raise the money and the dot-com bubble would burst, he would literally have no money to sustain himself. So because he raised that, he was secured already, he had it. He basically survived when hundreds of companies died. So he pivoted to like profitability with his like, I need to do now AWS or something. Yeah. So he like shifted. But the main idea, he was lucky. Literally, this is like luck. Yeah. And nothing else.
I mean, it's luck in already having pre-existing capital a lot, because not everybody could have the money to buy bonds when they're about to crash their business.
Exactly. So like he secured it a little bit for him.
Yeah. Some people are like, it's good planning. I'm like, he's from a rich family. That's always usual startup, you know?
Yeah. My mom gave me a loan of $3 million a year. So the other one is Airbnb as a success story. So what Airbnb did, so they went through a little of a drama. So obviously Airbnb called it from air mattress on the floor to 1 billion IPO. So initial
initial public offering.
Yeah, public offering. So their stock basically went public, and they almost lost it all over a single trashed apartment. So basically what happens in 2008, Origins, kind of in San Francisco apartment, the guy started building it. They called it blitzscaling because basically they were listing it everywhere and they ignored all the regulations. They're like, you can rent out your mattress and whatever, your couch.
Yeah.
And in 2011 they had basically a disaster where one of the hosts' apartment was trashed. So people like threw a crazy party, completely trashed the apartment. And that was like a very bad PR. They're like, abandon it, there should be regulation. And I remember even on this point, when I was working in a hotel business, I was a marketing manager. Everyone in this company was complaining about Airbnb because it's the biggest competitor, and they said, why do hotels need some sort of sanity check on security?
Yeah.
They need a like a sensor for gas, a sensor for this, we have inspection. And then you as an Airbnb, it might be a dangerous place, and you're like, well, I'm going to rent it for much more, like, for example, than a hotel even.
Yep.
So, and they don't have any regulations or any kind of...
It also became such a way for people to just avoid having rental contracts and just be messed up.
Yeah, I mean, that's maybe a little bit different. It's more that, like, how they scaled was there was no regulation that you cannot do that.
Yeah.
So they basically, as the business was growing, they were building rules as they were ready, like, doing something. So, like, the company does something, a year passes, they're like, oh no, this is not that good. Let's go a year back and try to fix the things that are already, like, working for a year. So basically, the guy, when the apartment was trashed, how they won over their users again, they basically compensated and added 50,000 euros post warranty, so to win back trust. And in 2020, travel shutdown nearly killed them, right? So they went through, like, hey, layoffs, let's do, like, a few things, like experiences, and of course focusing on their public, like on their IPO.
Yeah.
And basically that's what they recovered their trust when it came to, like, scaling and renting out stuff. What I like the last one is TikTok, obviously, which is a Chinese startup. Everyone knows TikTok. I'm not going to go through it. But basically, they built such a great AI model, whatever algorithm, that knew so much about you that it would basically give all the recommendations that make you stick there. It exploded, and other companies, they started acquiring companies like across the board.
Yeah.
For example, Musically, they went and acquired 1 billion users from it. So they just bought a company, and they had endless ad spends that basically they hyper-targeted to, well, because they had great algorithms, right? However, where the issue is, and now latest one is with US, when they tried to ban a spy app, TikTok, very bad, oh my god. So basically geopolitical backlash in the India, in US, and in EU as well, just because what they did, they rushed and they abused the data, and they basically did not follow any regulation, and they basically, to win the markets, they were facing, like, political risk higher than kind of burn rates. The game was changing now. The security, they disregarded any kind of regulation to blitzscale. But now what's happening is the damage control.
That's the kind of funny thing about it, because they breached everything because they weren't really obliged to follow U.S. laws in the early days. They were just sort of like a Chinese company that were doing their own thing, TikTok. But then, like, then they had to set up a U.S. office, and then, like, the guy from TikTok, his name was. He was actually a Singaporean guy, but they kept brought him in and kept questioning him as if he was a Chinese agent.
Oh, I've seen that. Oh my god, that was so embarrassing.
Yeah, exactly. It was insanity.
Do you have any connection to the Chinese Communist Party? No, I'm Singaporean.
But
do you speak Chinese? No, I'm Singaporean.
It's par for the course, because then, like, Zuckerberg was the same thing happened to Zuckerberg when he went to the UK and had to report, like, why Cambridge Analytica was able to completely subvert their system. So blitzscaling is just what happens with social media companies that early in the days, every time they come up with a new functionality. And then people are like, hey, maybe this thing shouldn't be able to read your mind and sell your data, and so on and so on.
But this is as well an example that a lot of companies, when they start focusing on all the things all the time. When you mentioned, like, in the service industry, you also can, like, solve a lot of things. But when it comes to, let's say, an app, it's like, oh, we're going to have a new functionality, a new functionality, a new functionality. Now we have 1 million functionalities, and they all kind of average and they suck. However, that's how you try to win the market. But then when you have half-ass done everything, you have to go back and fix the things that are actually bringing the most revenue, or are, like, focus on the things that actually make sense, people use it, people want. So in this case, I really liked that. Well, Amazon was lucky in a situation that they basically, we're going to raise money before the collapse. Airbnb is basically, hey, there's no regulation or rules. And even at my time, when I heard that, everyone in the hotel industry is, like, super upset with it because they have to follow all these crazy rules, and Airbnb did not have any rules or regulations, which is crazy because that was like 2015 or something. Insane. And lastly, obviously, when it comes to TikTok, they're like, oh, no protection for data. Internet is a wild west. Well, and now we have digital ID. Everyone should go listen to the first part, but we're very upset with the regulations in UK about digital IDs and how we're being tracked and have to verify. But that's what imagine TikTok would go through it now. They would not succeed. There's no way.
Yeah, I mean, there's also the thing where, like, a lot of those digital ID laws and so on, I'm just like, why are we having to suffer for it? Why not the companies? They messed everything up with the blitzscaling strategy, and then we have to pick up the pieces.
Yeah, and this is a bigger question in general than just blitz fixing and blitz scaling. Is that it's always the user's fault somehow.
I know, and it's also just like, in my case, it's also just like, wait till we get to Uber. I need to vent.
I have Uber as a bad case.
Yeah, but either way, blitzscaling often plays out in the tech sector because tech advancements throw the market up in the air, forcing competitors into mad scramble. It's so hard to define what tech does because every time it's a little bit different. Software is like can mean a billion different things at this point. So so every time somebody comes up and says like, oh, it's like a bookstore, but it's online, and then you're like, well, okay, then the bookstores have to obey this law, this law, this law, this law, and some of those apply to you and some of those don't. So you kind of have to throw everything out and create an entirely new set of laws for each of these.
I agree. This is what I was looking at. Some sort of video about economy and the markets and how like S&P 500 is growing, so stock market is always, inflation comes, the stock market go up, we print money, market goes up. But the thing is that these rules did not exist 100 years ago, and they're like, oh look, stock market goes up. But the thing is, as markets exist, they build it as they go. I kind of imagine like if you're walking and like you walk 3 steps forward, you turn back and you're like, oh, I need to put a tile, and then you put a tile behind you that kind of already is a little bit too late. Some people say, well, we need regulation before we can do something, but that doesn't bring innovation. They're like, oh, let's put a tile and then stop on it. But then they put a tile, they're like, you know what, that's not the direction I wanted to go. And then they have to pivot, and imagine it takes like so much time to create that. And that's why some of like these examples of like Amazon and like the TikTok, because they were not following the rules, they were kind of disregarding anything that is on the market.
I mean, there were no rules back then.
Or there were no rules, or they were kind of bending it, like, oh yeah, this might bite us back in the ass later, but you know what? I have a lot of money, I have to spend it. Before that bites me in the ass, I can grow scale when I can support a market, and then we'll deal with it. Because it's like, that fine is like, oh, that fine I'm going to pay of 20 billion is like 1% of my revenue. I don't care. That's the price of, winning the whole market.
Yeah. That's the thing. A lot of these laws aren't established as supremely, but people have been predicting that this exact scenario would happen eventually, that this would lead to weird sorts of monopolizations, and it would eventually lead to a devaluing of what there were a lot of, like, for example, an Uber driver does not get paid as much as a taxi driver for a reason, because the Uber has no liability towards whoever they're paying.
Yeah, it's a goal. Anyone can work. Yeah, it's
sort of destroyed the public transportation industry in that regard. Well, the private public kind of one, which is taxis.
Yeah, well, for Uber, it's kind of a company that conquered the cities and ignored the rules, right? So none of the rules actually fought back. So here, that they were subsidizing rides, they were fighting regulators, and they hired aggressively, so they had to onboard a bunch of people with, like, oh, if you accept this in 5 seconds, then you're going to get a bonus, so this is doubled.
Back in, like, 2012, I'd like to say, something like that, when they first started, every other news story used to be Uber driver did something horrible. Uber driver was, like, stalking someone or some nonsense. And there was a real backlash to how lax they were about who they were hiring.
Yeah, but that's obviously the same problem with Airbnb, right? They succeeded, but again, everyone hated them because, well, every, let's say, hotel chain hated them because they did not have to follow these regulations. And when it came to Uber, basically, because they basically disregarded any competition, they're like, oh, anyone can do this. Therefore, they also, in 2017, there were a bunch of scandals, and obviously legal scandals within the company, that the CEO was fired. Internally, the company was also very toxic, so the work culture was very toxic. because there were obviously ethical disconnect of like, hey, what are we doing? You know, there's sexual assaults. I would like, well, we don't know, but they're paying us.
You saw that video of the Uber CEO taking an Uber, and the Uber driver filmed it a little bit, and he was like, "Hey, you're the CEO. Can't you like adjust the ratings so we make a little bit more money? I can't live off this, you know." And the guy was just like dismissive as hell.
I mean, what can he say?
No, but that was their strategy. Underpay everyone as much as you can, so that the taxi market, just implodes, and you're the only person left. That's a huge part of blitzscaling.
Yeah, that's literally what happened, right? So basically, for what I like wrote as a lesson for them, it's like regulatory debt and culture debt can be as lethal as financial debt. So
Yeah.
it's not that they did not. Well, they were burning through a bunch of investors' money because they were not earning any money. They became profitable like 1 month or something, or like one quarter, and then never again, or something like that. I don't know about now actually.
It's because like all these other rideshare apps suddenly jumped on board as soon as they were about to hit even a bit of revenue.
Yeah, maybe that's
And
actually
for example, in Eastern Europe, Bolt is so much more popular.
Yeah, that's true.
And back in Latvia, I was going. They still had a robust network because you could just call this company called Panda.
What I know that you like some taxi companies they're integrated into Uber, but in other countries not. I know that in Italy, for example, you can call an Uber and the taxi would come in.
Yeah, they basically act as a ride-sharing mechanism.
Yeah, exactly.
Rather than the ride-share provider.
Yeah, but in other countries, I don't know which one, but I remember that there was some countries where they couldn't compete. They're like, oh, the taxi drivers, they're boycotting, they're quitting, they're doing like, they're basically swapped, right?
Yeah.
So all the taxi drivers went to Uber, and that's it, and got underpaid, and then it's like, well, I have to earn something than nothing. And there was a bunch of layoffs. So anyway, Uber is a terrible company. That's what we learned.
Yeah, I mean, they provided a cheap service, but I don't think it was worth it. Now, my favorite anecdote about this, and I hope I haven't shared this on the podcast before, because I feel like I might have. But Uber had a disastrous impact on New York traffic. So one time in New York, to become a New York taxi driver, right? What you needed was a gold coin that you have to have on your taxi at all time.
Yeah.
And this gold coin was made prohibitively expensive on purpose to be like something like 10,000, 1,000 or something like that, dollars or something.
Yeah.
Anyway, Uber comes along, and now everybody can declare themselves a ride sharer. So suddenly, taxi traffic explodes in New York. The congestion goes way up, and now they've been countering that with congestion pricing, being like, oh, in these hours you're gonna have to pay this much more parking, all these sorts of policies.
Yeah.
So Uber was a disaster for New York in particular, which was already a city where they had a problem with people just declaring themselves taxi drivers too easily.
But then coming back to the coin, so to get a coin, it's like, hey, you have to pass an exam to be a taxi driver.
You have to get it from the city.
Yeah, okay.
You have to get it from the city.
Gotcha.
That was the thing. But that one coin was like kind of keeping this sort of thing
Like authority and like certification.
Yeah. And then with Uber, it was just you can just declare yourself whatever. You get. I think in New York it's also illegal to just paint yourself to be completely look like a taxi.
I think in the UK it was a very similar issue. I know in London to be like a cabbie driver, you had to actually pass an exam, know all the streets to ride the black cab.
Yeah.
But the thing is, then Uber comes along, as you said, and they completely they don't have to do that anymore because now you have GPS. You don't have to know the streets. You don't have to be certified. You don't have to be legal. Whatever. You can be a criminal. Doesn't matter. You can just register and that's it.
Yeah, I mean, Uber just flooded the streets with people who aren't there to drive themselves from place to place, who are just waiting around for somebody to give them a ping. So that alone causes so much congestion.
Yeah, that's true.
You're supposed to either be in an office or at home or just doing your own thing at that time. but you've just got thousands of more cars on the road, which is bad for just the city's congestion, bad for its environment. It's bad for like just I think it's bad for people to be getting underpaid to do taxi work. The underpaid part, not the taxi work part, obviously.
I remember once I was coming back like from a trip back home in the Netherlands.
Yeah.
And what happened, it was like heavy rain, and I thought I'm not gonna walk in this heavy rain because normally like I would walk to the train station. I was living in a different place, and then ordered an Uber, and this girl just drives by, and she's in a dress, like high heels. I'm like, why are you so well dressed? I'm like, wow, how come? She's like, oh, I was going through a party. I was driving home and I turned on Uber. So she's like, she works somewhere like, I don't know, in the service industry. She's like, I just turned on Uber because I had to go home and I saw that someone was going, like, it was on my way to pick you up and drop you at home and then go home. So she's like, I do Uber only when I'm driving somewhere further and seeing if anyone I can pick up on the way.
Yeah.
So it was very interesting to me to see there was like a side hustle for her.
Yeah, I used to travel frequently with people who were going from like other cities to here or to other places, and just I would always check a BlaBlaCar.
Yeah, that's what I thought about.
Exact same strategy.
Yeah, no, that was a cool one. The other one about blitz fixing and kind of fails, it was WeWork. So WeWork is a 47 billion rocket ship that forgot actually that they're in real estate, not tech.
Yeah, yeah.
So basically, blitzscaled by signing leases worldwide in a reckless pace, burning billions. IPO filing exposed losses, government chaos, and basically valuation collapsed in weeks for them. And the CEO was fired. Solid Bank had to bail them out in the US. They had mass layoffs. So the lesson here, like very short, is that blitzscaling without a scalable business model is just accelerating towards a cliff.
Yeah, that's pretty good. But in this case was more like, we're going to figure out what we do later.
Yeah. Sell first, figure out later.
Yeah, office spaces for people, and people are like, we can work from home these days. Why would I just go to a random office space unless, like, you're going to offer me something?
Yeah.
They weren't really doing anything like that. I think they made some offers like, oh, come here, we've always got a cafeteria or something like that later in their years. But it never amounted to anything.
Again, they forgot that they're like an actual real estate company, not a tech.
And that's the thing, like you said earlier, it's the physical ones that fall apart the quickest.
There you go. So we had Uber. Well, Uber is still alive, but obviously not without drama and kind of disturbing the market. WeWork, and the last one I have, it's called Bird. So it was the fastest unicorn ever, and one of the fastest to flame out. So basically, it's scooters. It's the like in the Netherlands, you do not have electric scooters.
Yeah, okay, right. So it's kind of like the Boris bikes and stuff like that.
Yeah, Bolt also has them, like in Germany, or they call them like in every country they have them.
Drop them off at one of the.
Exactly. Yes. So basically, scooters were dumped in cities, and valuation hits like 2 billion in under 1 year. Maintenance nightmares, city pushback, and unprofitable rides, and layoffs, obviously pullbacks, and eventual bankruptcy.
Yeah.
So basically, they're like, oh, now you can ride this. Like they cannot maintain it, and again, it's a physical one. So it's physical operation. Blitzscaling needs unit economics. You need to you can be early in the market, so something was not there. You can copy paste from one country to another. But the thing is, you cannot sell 90 cents like business offer if it costs you $1 to operate.
Yeah.
That's like one of those like blitzscaling wise words that I kind of found, that blitzscaling only when truly decides like who's the winner. Keeping temporary inefficiency temporary, so you have to understand that what you're doing will have a backlash, and some people are like, I don't care, I'm going to spend a bunch of money, I'll be laid off later on, but I don't really mind. You always have to think like, if you're blitzscaling, how to fix sometimes as you go, because what you do, like, oh, I have like 10 steps forward, but there's like 10 steps backwards that I will have to make to fix something. So you have to really evaluate how much of a crash and burn you want to do. Obviously, you have to build value, not just valuation, because that's what these big companies like.
But most of the time they do valuation rather than value.
This is I think the biggest drama.
We were talking about this earlier with the Elon Musk case, where he builds valuation on top of anything, but very few people have one of his successful products or something, you know? So it's mostly building stock valuations over and over and over again.
Yeah, but this is what I don't agree with. That's like people want to believe in the bright future driverless cars, or they're gonna like autonomous driving, whatever.
Yeah.
But the thing is, you have to figure out the business plan correctly. I understand that some companies they want to move fast, but they don't think about it.
Yeah.
Others, if you have like a board of directors, they just search for the next like times 100 revenue. They don't care how they're going to squeeze you out, what rules you're going to break. As long as it brings money, I pull out, I leave. I don't care how you're going to crash and burn and kind of legally have troubles later on. So as well, that's the issue in my understanding, that when it comes to blitzscaling, sometimes you need to like not only have the vision, but also have a plan. And not only have a plan, have the math figured out before you do anything. So like for me, when I was going through these cases, it's like, it's so simple, yet like you have such a Silicon Valley tech bro attitude towards like crash and burn or succeed.
Or the absolute discontent towards regulation.
Yeah,
That's also just Silicon Valley-ish.
that one is more complicated in my understanding, because now like, oh, we can get more for less in another country. And sometimes there's no regulation in that country.
I agree. But my main issue is usually what type of regulation you're breaking. For me, it's like if you're breaking labor regulations, oh, I'm not up for that. That's just you taking advantage of desperate people. Now, if the regulation you're breaking is something more like, if you could have Uber exist in a world where taxi drivers got paid the decent amount, perfectly fine. I have no issue.
Yeah, same. I agree. But so that's not how it works.
Yeah, exactly.
So this is where they're kind of building the rules after the fact. Like
yeah, no, but it's such a when they do it, it's such black and white American style thing where like thing is either 100% bad or thing is 100% good. So they're either on the side of regulation is 100% horrible always, and none of it should exist, and maybe government shouldn't even exist, which is a common Silicon Valley thinking, you know.
Yeah.
So, and on the other side, Americans are like, destroy innovation. We don't care about it. We're scared of the future. Regulation, 100% agreed. You know?
Yeah.
So the black and white thinking needs to sort of disappear. You need to be very careful about what you're regulating and why you're regulating and who gets hurt. Those are the three things you just need to know. Not just be on the side of innovation at no cost, innovation with no barriers, or control without any limit.
Well, that's where the lack of risk assessment is happening.
Yeah.
Like for me, when I was again researching this topic, I really liked the phrase like, you cannot start selling things for 90 cents if it costs you $1 to produce.
Yeah.
Right? And blitzscaling is exactly that. It's basically selling for the loss because you have to burn through money. But then once you raise your price, like Netflix, right? They're like, oh, we're going to raise the price. Cool. Everyone goes away. Oh,
Yeah.
oh no, I have said like out of 1,000 people, 10 people stayed. You know what we're going to do? Squeeze the hell out of it.
Yeah.
Like we're going to milk them as much as we can.
Blitzscaling is lost leadership until monopoly.
As well, like one of the ways.
Yeah. I mean, they all don't always get to reach monopoly, but that's the intended goal, And but as much as people like to talk about, oh no, companies don't want a monopoly; they want competition. It never works out like that,
Fair.
That's just not how market psychology works. Anyway, I've got the 5 stages of blitzscaling.
Tell me.
These are usually the 5 stages of companies as well. Anyway, family, 1 to 9 employees.
And that's what? That's basically explaining that this blitzscaling, or just the size of the company?
Yeah, size of the companies.
Okay.
As they grow. 10 to 99 employees, or people that work for them, not as employees, but as like their ride-share partners or your Airbnb renters, rentees.
Oh, so it's like blitzscaling names for companies. Okay.
Then village, which is 100 to 999. And then city at 1,000 to 9,000, and then nation at above 10,000, which is where you really are a monopoly like Amazon or something.
Fair.
But yeah, there's 3 ways that they work, which is business model innovation, strategy innovation, and management innovation. Business model innovation is basically when you come up with an entirely new model, a la Uber, I guess. And strategy innovation is when you come up with a new way to do the same thing. So maybe Amazon shifting to like, we're going to shift from books to selling everything. Or Amazon going from, oh, we have all these companies, this product is really popular, we can make our own version of it. Not Amazon, but that's more of like an Alibaba thing or a
Amazon does the
Amazon
same
does the
thing.
same, right? Yeah. I'm starting to forget. I don't use Amazon, guys. I really don't. But then there's management innovation, which is just like, oh, here's an app that cuts out the middlemen.
Oh, that's a cool one.
Yeah,
I like
that
those.
one's pretty cool. Like, if you can cut out the red tape with just an app being able to do that, theoretically, I mean, I just struggled to get my ID card made from the Pakistani government's damn app. It had me screaming, please send me a bureaucrat.
I think this is just like, this is the third party probably involved in that.
Yeah. Oh no, it was somebody's cousin who was just hired to make the app. Just insular money here circulation within the Pakistani government ecosystem.
Fair.
But anyway, my gripes aside, so these sort of make clear that these are very common models, and these map onto something that we were taught in our master's program, which is there's multiple types of innovation. There's like there's the process innovation and strategy innovation and business model innovation, and this is like this doesn't just apply to blitzscaling, but blitzscaling has these three as the most common.
Okay, that's pretty cool. I'm thinking about like management innovation. That's like a very complicated one to kind of say blitz scale,
Yeah, I
because
guess,
it's changing people, right?
but
It's
think about something like Slack, I guess.
fair.
Right?
That's a good
Because
one.
a lot of communication things get changed and structures go around. And maybe like Asana, for example. That's another decent one where, like, rather than having all of these, rather than like having a manager that's national or something, that same manager can manage a global team.
Okay, yeah, I didn't think about it that way. Yeah, fair. Yeah, that makes sense.
I'm just there's the management innovation one is actually really broad.
Yeah, because I was thinking about it.
It's all about how work changes. Anyway, go.
Yeah, this is not how I thought about it. That's why I kind of asked for clarification, because for me, management is like, oh, you have to change procedures. Procedures are difficult. They're slow. It's stretching. It's changing.
Think of it like workplace management innovation, or work how work is managed, or how the processes between employees can change from different tools. It's like when it replaces an old way of doing something within the office.
Fair. Then I think it's pretty cool then.
Yeah. It can be. It can be. Other times, it can just be a way for the company to surveil you. So
Let's
give or
manage
take.
projects. How many tickets did you close?
I have to be the stick in the mud every time. That said, you want to move on to how to blitzscale wisely?
Yeah, so this is more like what I already mentioned, that it's not about avoiding risk, right? So when you're blitzscaling, you kind of, you have to really put it on the scale and say, hey, I have a crap ton of money that I can spend on stuff, but the question is, do I want to do it like everywhere at the same time without thinking a lot, or do I want to strategize and take some time? So it's about like avoiding too much risk. Like, you understand that you're going to take risk, you understand you're going to burn through capital, which is not yours. You've got to show movement to the VCs and the board of directors.
Yeah.
So the main question is, like, it's all about controlling how much of the ship you're willing to set fire to get to the other side. And I really like, that's why I really, during this all the definitions, I really enjoy that, because it looks at like, hey, it's not about avoiding risk. It's like, I will risk this, I will fix it later. The question is, you have to have a hand on the pulse and say, when is that later? Where do you feel that things are starting to crash more than grow? And when you should start like actually, putting fires out in your company. Remember, we went to TNW a few years ago, and we went to Miro.
Yeah.
And there's like a Russian guy who's the CEO, and he said, well, we were blitz scaling, now we're blitz fixing, and the biggest one, he said, is culture. He said, because during COVID times, everyone started using Miro, and said that everyone was working remote, so we started hiring everyone around the globe as well, probably to cut costs a little bit. But he realized that the cultural fit was not like, it was like a cultural issue internally. The ways of working was an issue because there was a cultural issue, which basically made them release things longer, lower quality, break things. And he said after like a year or two, he's like, oh yeah, we have to go back and start fixing the internal culture. Maybe really look critically at people that are working with us. Understand what we want to focus on. Is it about functionality? Is it about people? He's like, of course, it's all about people. Functionality will come if the people are, highly skilled, great, and amazing, and so on. So, to like for each company its own. One thing that they have in like really shared is like they have a shit ton of money. All of them are basically like throwing like spaghetti at the wall and seeing what's gonna stick, and that's one shared thing. And the way you burn through that capital and what kind of risk assessment you have, that's where the important things are.
You can sometimes get like two different answers to how to blitzscale wisely, or at least one point gets two different diverging answers. One is this like, oh, you gotta like capitalize heavily, get at the biggest check you can from venture capital as possible, but those companies have to pay it back sooner, So they're gonna sort of crash and burn very quickly. Like, look at Theranos. It was promising the world. Oh, you remember Elizabeth Holmes?
The blood test.
The blood test thingy. I'm surprised you forgot so quickly.
Like, I remember her when you said it's like I had to go through down my list. I'm like, okay, which one is it?
Yeah. So they promised the moon and stars and gathered as much venture capital as possible. But then you have more people breathing down your neck asking for money back.
Yeah, but that's where you have to burn through it quickly. This is the same thing that some people.
True, but if you that's where I'm getting at. I think you can have a small amount that can be used more effectively. You know what I mean?
Yeah, absolutely.
For example, AI companies right now are getting like $500 billion valuations, right? That will cause some problems down the line if they don't figure out a business model soon, and then they won't be able to just constantly regenerate that money with the same investors, at least.
No, that's true.
Yeah. So, but if it was a smaller amount of money, for example, with a more efficient system like DeepSeek, which uses less energy, doesn't require as many data centers, and was just, the version of it which was, oh, you can have the smart assistant in an iMac Mini, stuff like that. The development costs wouldn't be that high, and the payback would not have to be that high. The money you burn through could be a smaller amount that you needed to burn through, I guess.
It also depends on who's your investor. I've seen there was one company that said, oh, we have enough capital that we can provide a good service.
Yeah.
They're profitable, but they said, hey, we just became profitable. I don't remember what it was, actually. It was during the something as well, AI related, something that would like help people filter the news. I don't know. And the guy's like, we have 20 years of capital we can burn through from VCs. And all the VCs agreed that this is a good calculation and model.
Yeah.
So he said, we will be working for 20 years and burning for 20 years worth of capital. And if we're going to be profitable, that means we'll obviously pay our investors and stuff like that. But this is another way, but you have to find those people who are going to be okay with, hey, 20 years of burning my capital, great. Because they all say, I need 25 times more back in a year, and then they like burn out the whole company. So you have to scale. Also, to avoid rollbacks, and also if you're on the board of directors of the company that you sponsored, let's put it this way, you call the shots as well. Sometimes it's your network, it's your who you're gonna shake hands with to scale. However, sometimes you have very big egos in the room, and smart companies, sometimes smart, not smart, they're trying to burn through capital as fast as possible and get numbers as fast as possible, because that raises evaluation.
For sure.
Or you get less control from the board of directors, you get less people checking in and annoying, and if they say, okay, I want my money back, they're like, poof, it's gone. So like, oh no, what money? I don't have any money. I burned it through. You gave it to me. I spent it. That was an agreement, right? And then that's it.
I mean, I'm talking more about being smart with the money.
No, I'm talking about not being smart with the money.
This is like just my pet peeve when I see people overspending.
Yeah, I'm the same. Like I'm really about like, let's think how we can stretch this rather than how we can burn and fall.
Oh yeah. Anyway, when's the next vacation?
Amen. No, but that's the main takeaway from my side.
Yeah, I mean, I think that wraps it up. We
Awesome.
blitzscaled through that topic.
Wow. Yeah, so thank you everyone for listening. I hope you got something from it. I know it was a little bit of all over the place, but it's such a topic that you cannot really pinpoint one thing.
It's also just a developing strategy. It's the newest thing in business, I think.
Yeah, it's like people say, this is AI, this was smart. It's like a buzzword as well, a little bit.
Yeah.
It's basically you grow disregarding rules and then you fix because those rules catch up. That's it. Amen. That's your that's the way you have to think about when it comes to blitz scaling and blitz fixing.
Yep.
Awesome. Thank you for listening. Go listen to the part 1 where we cover some news and see you next time. Thank you.
All right. Peace.